Hi everyone, hope you're doing well. Today I'm going to talk about a stock market crash. Are we going to see a stock market crash, and what are my plans around if there was a crash, my cash pile and everything like that. We saw last Friday the first significant pullback for a little bit, and then out of nowhere everybody started mentioning the C word. So we'll talk about that. Obviously, yesterday we saw a bit of a recovery in the market, so everyone's calmed down a little bit since then. So I'll be talking a bit like that and my current thoughts about everything. It's been a while since we talked about anything like that, so I thought it'd be a good time to do a little bit of an update. So hopefully there's a bit of useful information here for you today. As well as that, apologies there was no video yesterday. I just too busy. I was just too busy to sit down and record a video. Busy day at work, and then also my priority was to get some exclusive content to the Patreon guys. So I did a stock request, which is where the members of the Patreon vote for me to take a look at a stock. The winner this week was Salesforce, so I gave my thoughts on Salesforce, which was about a 20-minute video. So if you do want to see that, there's a link of it, a link in the description if you do want to join the Patreon. But yeah, what we'll do today is we'll do my latest thoughts about where we are at the stock market crash, and also what our plan is around like cash piles and everything like that. So I hope it's a little bit useful. Before we do, a quick mention from today's sponsor. Today's video is sponsored by investing.com. Now I'm going to let you guys know straight from the start that investing.com are currently doing a flash sale on their Investing Pro platform. That is an extra 50% off, and also you get the normal 15% off Investing Pro. Now, why would you want to sign up to Investing Pro? Well, right now they currently have a Pro Picks AI. This is an AI tool that is able to try and find stocks that could potentially outperform the S&P 500. And if you look at the previous results, that has led to an annualized return of 29%. Over a 12-year time frame, that is a total return of 2,619%, which is pretty incredible. And also with Investing Pro, you also get Warren AI. This is a AI search engine that will help you when you're doing your research for your stocks. So for you guys that like using Gemini and finding information about your stocks, try Warren AI. This is a dedicated AI tool to doing the research on those stocks. So if you do want to sign up, there'll be a link in the description and in the comment section. You have between the 13th to the 16th of October to take advantage of this flash sale on at the moment. Guys, 50% off with the normal 15% on top. This is a great opportunity, and don't forget about the returns that have happened with the Pro Picks AI. Thank you to investing.com for sponsoring today's video. And with that, we'll get on today's video. So one thing that happened last week is Jamie Dimon, CEO of JP Morgan. Obviously, a lot of people like his opinion on where the stock market is at, where the economy is at. And obviously, as JP Morgan CEO, he has a lot of advanced data than most of us have. What started on Wednesday was he came out with a little bit of a statement saying that he is far more worried than others about a stock market decline. So obviously that grabbed the headlines. But what was interesting is he said, he told BBC in an interview that was published on Wednesday, the market could fall into a correction, a 20% decline from its peak, sometimes within the next 6 months to 2 years, even as stocks continue to push through record highs. So obviously when you have someone like that and he's coming out and saying, look, I think there could be a 20% pullback in relatively soon, that takes the market headlines of like, okay, maybe we should be a little bit concerned by that. But the thing is this here lined up the video perfectly, is that, as soon as we see a little bit of a pullback, it's amazing like these news stories get this much attention. And the fact that, anyone that claims to know when a stock, I always say this at the start of a video like this, is that anyone that claims to know when a stock market crash is going to happen is just talking a load of rubbish. No one knows when the stock market's going to crash. You just don't. By the time you realise the stock market's crashed, it's probably too late, and half the time it comes up absolutely out of nowhere. So don't believe anyone that says they know when the stock market's going to crash, and don't think that you can time a stock market crash, because it's absolutely impossible. I mean, just look at this here. He thinks that we can see a 20% decline in the next 6 months to 2 years. Talk about a broad time horizon, 6 months to 2 years. I mean, imagine all the things that can happen in that time frame. It's incredible. Like if you went back to 2020 and said exactly the same thing, there's going to be a stock market crash in the next 2 years. Well, yeah, you had one because you had the COVID crash. But how many people would have said, oh, the reason why the market's going to crash is because of the COVID situation? No one. It was just, look, that's what happens. Nobody predicted it. And then if you go to next 2 years, so if we go from the start of 2022, obviously the market crashed because of the Russia-Ukraine situation and maybe a little bit of the inflationary environment that we had going on at the time. How many people predicted it? No one. So, and then obviously if you go to the start of 2024 and you go for the next 2 years, then you have the tariff situation. How many people were predicting at the start of 2024 that, oh, by the way, when Trump comes in 2024, is going to, do the tariff situation that's going to cause, well, it wasn't actually an official crash of 20%, but what was it, 19% at its peak? So, saying that there's going to be a 20% decline in the next 2 years, it's such an easy cop-out because then, something happens and it pulls back down 20%. Like, I told you it would happen in the next 2 years, yeah. But whatever is the reason why, it probably nobody would have thought it was going to happen. It's such a cop-out. So honestly, like I always say, like you can't, people that tell you you're going to, crash is going to happen, don't believe them. Like a time frame like this is like, I told you it was going to happen. And don't try to time the market as well. This is what I always say is like, when I get on towards the end of the video, like I'll say to you guys, like I think the market is in a bad place. Like I do think the market is overvalued. But you won't see me sell all my positions and sit in cash. It just won't happen. Because, like, for example, so far, year to date, the S&P is up 13% year to date. But if you watch my videos at the start of the year, I was saying to you guys, market's a bit rich. But I didn't try to time the market because I would have missed out on a 13% gain on the S&P 500. And for me, I'm up, 40, 50% year to date. Imagine if I tried to time the market and I missed out 40, 50% returns. Not devastated. So I never, even though when I think the market's overvalued, you never see me try time it. Now, obviously Friday, the market sold off because Trump came out with a post saying like, oh, I'm going to throw some more tariffs on China. And then by Sunday night, it was like, I'm not throwing any tariffs on China. So, this sort of volatility here is just incredible. Like the fact that the market can pull back such a significant, what was it, a 3% pullback on just one tweet? It's incredible, isn't it? But that kind of shows you the sentiment that we're at. But it also shows you, like, and people forget this in bull markets. Bulls take the stairs, bears ride the elevator. And that is so true. And I think, like, there's been a lot of people in the new people in the market in the last 3 years, and they've never been through a serious crash before. Some of you guys that went through the 2022 stock market crash, you will know what that was like. That was a serious crash. And like, the stock market was down, 30%? At one point was the worst stock market crash since, the 08 times. I think it was even slightly worse than the 08 times for like a good couple of months. And by the way, I've seen a few people recently saying like, oh, the 2022 stock market crash wasn't even that bad. And that's just an absolute load of rubbish. I saw our classic friend Sasha, he was out the other day saying like, we hadn't had a proper crash in 2008, and I was like, yeah, whatever, mate. Like, 2022 was a serious crash. That's why you stopped posting about stock market content and stopped talking about stocks during that time frame. So it must have been pretty bad. So there's been a few people just trying to disregard that 2022 dip, but that was a big dip. Any of you guys who went through it would know what that was like. And that was a bit of a tough time, to sit on stocks for like a year and a half, really, and they just kept going down every day. It was tough, but like I said, like going back to the original point, like not a lot of people realize like what a bear market is like. And a bear market is that, you have all these lovely days where the stock just goes up nicely in a bull market. But bear markets, when the market drops, it drops like big amounts. Like very quickly, you're looking at your account and it's absolutely amazing. And within a month's time, boom, a lot of your gains have been cut in half and you're like, wow, what just happened here? You feel like you're being slapped in the face. And that's where you've got actual panic. When people are suddenly all, see the profit that they've had on positions half in a month's time, that's when you get real panic. And when we have the drops like that, 3-4% drops every day, that's when you get real fear in the market. And that was a prime example. Like on Friday, we had like a 3% pullback and you saw how much, things pulled back in one day of fear. You add that into a month time frame of that happening, you realize how quick the market can turn in that time frame. The panic can really take hold so quickly. And I'm not so, you know what? Yeah, I'll show that first. So, and this is a prime example. Like, I was on this Training 212 page, and oh, by the way, like Training 212 pages and like the actual community on like the Training 212 app. If you ever wanted to see dumb money, they're the places to be. Like they are some of the most uneducated investors on those spaces. If you ever wanted a sentiment of where the market is at, those are the places to go. Honestly, they are full of like shocking investors. And I was saying this guy posting like, wow, not seen a kind of rug pull in years, not even during the pandemic, on one day being down that much. Imagine what's going to happen when the stock market actually has a major correction. I mean, you only have to look at what this guy's holding, to be fair. I mean, look at all this here. This guy's going to, unfortunately, he's going to lose a significant amount of money when we actually have a serious market pullback. But, when I've not shown this since 2022. And when I showed this in 2022, the last time I showed it, we were somewhere around here, which is quite funny because now I'm showing it again. And I remember being in this time period here and I said, one day we're going to be back up here again. And I think maybe today is that one day. I think that's the one. I think today we've now gone from the opposite side. And I think we're more towards this sort of area here, this euphoria and thrill market where, anything goes up. And when we have the dip, like a Friday, and it's complacency, we just need to cool off for the next rally. That's kind of the feeling around the market at the moment, isn't it? And eventually, what you'll see is when we have these dips is everybody comes out and goes, oh, buy the dip, it'll be okay, buy the dip. And we had that during the tariff situation. But it's when we get to the markets and you start getting to the anxiety point, the denial point, the panic point. I remember the time frames when we hit this point and people were just selling anything at crazy valuations. The people were selling Meta at $80. People were selling Palantir at $8. People were selling Hims and Hairs at $3. And it happened. I was there. I was making videos about it. And very quickly, people don't realise, how quick you can get to other ends of the chart. And it feels like maybe we're towards this point on the chart again now. And when I look at the market itself, like, I am concerned about where the market's at. Like, 30 times earnings for the S&P it's incredible. It is incredible. Like, this should be about 20 times earnings. And I know people say like, oh, it's different now because people have the education around like buying the dip and there's more like regulation about when the drops happen and circuit breakers and, the S&P 500's are higher quality businesses now. They've got higher profit margins. There's more SaaS companies in there. And all that is true. And there's an element of like, I know when people start saying this, start saying, oh, it's different this time. That's when you should be worried. And there's an element of like, the stock market isn't what the stock market was 40, 50 years ago. It has changed dramatically. And maybe there's the element of like, where we used to trade at like 16, 17 times earnings. Yeah, you know what? The market might trade at more of a premium now, like 23, 24 times earnings. But when you get into the point where you're about 30% higher even then where you should be, it is concerning. And it is concerning when you see like, Palantir is a cracking company. But when a cracking company is trading at 217 times earnings, it is a lot. And I know the growth rates are, Palantir are bringing out like fantastic numbers at the moment. What they're growing at, like 45% a year, it's great. And next year, 34%. But if the market ever gets spooked at a point where there's just a bit of pullback in the spending and people aren't signing up to Palantir's products as much, as like we saw in 2022, there's that little bit of a scare around the businesses and that revenue growth drops to 15% a year and it's no longer 45% a year. And you're trading at, whatever we said, was it 200 and something times earnings? Like, very quickly things change in the market and you've got to be careful of that. I was looking at Jobby the other day and I was talking about this on a video. I think it might have been on the private group. And I was talking about Jobby's valuation and you got like a company here that has no product. They don't sell anything. They make no revenue. They lose 800 million a year right now. And yet you're starting to get companies that are, 14 billion market caps again. It's a bit 2022 stock market vibes. You don't have to only look around commodities and what's going on with gold at the moment, and some of these cryptocurrencies and what they're trading at the moment. I had a friend today that sent me a message about investing into mining companies because of the gold prices going up. And that's the point where I'm thinking, when you get guys that are not interested in the stock market and never been interested in stocks, and then they start mentioning about investing in things and gold and mining, that's when you start going, okay, this is a little concerning, and the same thing happened in like 2021, 2022, where people had no interest in the stock market, started getting interested in the stock market. Then you're like, okay, this is concerning. Because I'll tell you something, the times when they should get interested in the stock market, which is here, down here, nobody's interested. It's the old story from Peter Lynch in the cocktail party. When everybody's talking about stocks, you go into a cocktail party, and everybody's talking about stocks, that's when you're concerned. When you go to a cocktail party and you mention you're in the stock market and it's this time period here and nobody's interested, and go, I heard that's had an awful year. You don't want to be in the stock market. They're risky. The stock market's risky. It's gambling. When that's the time, they're the best times, and we're certainly not at that time right now. We're certainly towards that time, and we're certainly at the time where you go to the cocktail party and people are saying, "Hey, gold's doing well. Bitcoin's doing well. I bought this stock here, don't make any money, don't make any revenue, don't make any profit, but I'm, what is it, up 107% year to date?" That's when you start going, okay, this is, it's concerning. And, I look at the market overall, and I am, I never time the market. I will stay mostly invested into the market. I will never time the market, but I am concerned. I've been concerned for a little bit. And the concern at the moment just keeps getting more and more. I'm concerned around a lot of valuations. I'm concerned about some of the sentiment around some of the stocks that are doing well. I'm concerned about some of the people that are in the market at the moment. It doesn't take long for them to get scared out of the market. The first couple of dips, like, yeah, buy the dip. But you wait. If you get 3 or 4 months where the market keeps going down and down, you very quickly see how the retail investors changed. So yeah, overall, like I don't try to time the market. I will stay invested during this time frame, but I am concerned. And when I do get concerned with the market, I just go, okay, I need to have a cash pile, because if it goes in the wrong direction, I need to be there ready to take advantage of it. And those are times when my cash pile does tend to get a little bit higher than where it historically is at, and that's the case. If any of you have been watching the stocks I've been buying video that I do every month, you'll notice as if a lot more sells appearing at the moment. There's a little bit of profit locking going on at the moment. There's a little bit of an increased cash pile going on at the moment. In fact, the other day, the cash pile nearly touched 25%. And I was like, maybe this is a little too high. And because of that, I had to go, I bought like a bit of PayPal quite heavy, a bit of Adobe quite heavy. I've been buying into Shift4 payments and Money.com a little bit more at the moment to just keep that cash pile, because I thought that's a little bit too high on the cash pile. But I'm probably around about 20% in cash, and that puts me in a position where if the market right now wants to carry on being euphoric and keep going up, I'll still make money from it. But if we get to a point where the market goes, okay, let's take a break, or maybe we end up, doing one of these, and we start hitting that anxiety, denial, panic, if we start hitting that point and there's a lot more of those opportunities coming on, well, I'll win that way as well, because I'll have the cash to take opportunities. And it's a great thing. It's a great thing because I'm not panicking right now. Like, if the market goes up, I make money. If the stock market decides to self-destruct and has a 20% drop, I've got the cash to go buy. And that's a lovely thing, because every time I go to sleep at night, I wake up, I don't have to look at stocks. I don't wonder where stocks are, because whatever happens either way, I'll win. If they go up, I'll win. I'll make my money as the stocks go up. If the stocks, if tomorrow, if the stock market has a 20% decline, won't be bothered. I'd be buying. I've got the cash to buy, and that's a nice place. That's a nice place where I'm in. I remember a lot of people in 2021 went into the stock market at this point here fully allocated, up loads of money, which was amazing, but fully allocated. And there was a few signs there. It was a bit concerning. And then what you saw happen is we had a 30% decline in the market. Because they were fully allocated, couldn't buy anything. They had averages that were, pretty high. They couldn't average down on everything. And it made it really tough for them. But, if you're in a good position in 2022 and you were able to buy a couple of things, you were able to buy those Hims and Hairs at $3, those Metas at $80. Yeah, it wasn't a nice time, but what was a nice time is when those things that you bought during the pain gave you the rewards. So yeah, that's where I'm at with everything overall. So hopefully there's a bit of useful information about everything where I'm at. Like I said, I'm in a happy place where we're at the moment. So I'm happy to just watch and see what happens in the market, because whatever happens, I'll be well positioned for both outcomes really. So yeah, that's everything overall. Hopefully there's some useful information in there. And tomorrow I'll talk about some of the UK stock updates, because there's been a ton today. So I'll cover some of them tomorrow for you guys. Apart from that, hope you enjoyed it. See you in a bit.